Hello, everybody. Welcome to Tuesday. The S&P 500 was up almost 1% today. Kind of amazing. We actually closed on Friday at 57.51 for the S&P 500. We dropped almost a percent yesterday. And then today we closed again at 57.51. So it's not that common to get, 1%, recovery immediately. So dip buying coming in. A lot of the tech stocks were selling off yesterday. Today, they did quite well. Matter of fact, the Magnificent Seven, the little index of these seven stocks was up 1.7% today, for example. So, one thing that might have been a catalyst in here was kind of an interesting piece, just because the price of oil dropped 4%. And that was attributed to the fact that China decided, at least at this point, to not do additional stimulus. Saw the Chinese stock market come down, and rare earth metals and those types of things that are related to China came down, and oil, of course, because obviously if they can get things really rolling, they use a lot of energy for their production of being essentially the factory of the world. As far as that goes. So, when oil prices come down, that takes some pressure off of the inflationary situation that we're dealing with, and might allow the Fed to do a rate cut, because this is all kind of coming around to the same things over and over again as far as that goes. However, a lot of this stuff is kind of the day-to-day issues that are happening, and again, the full focus should be on earnings. And so that's what we're starting now. We've got earnings week starting up here. We're going to start out, with the big banks like we usually do and those types of things. So it'll be interesting to see if these companies can continue to do what they have been doing, especially the big ones, the S&P 500 companies, those type of things. Can they continue to beat expectations like they have been? So I think that's more important for what's going on. However, again, in the face of the situation with the election, I think people are holding back. Matter of fact, I saw an article today from Charles Schwab saying that people took out more money than they put in last week on the stock market. And so, the most commonly asked question for me during my appointments is about, what do I think could happen with this election, and how is that going to impact the stock market? I've mentioned a couple times that, usually these elections are not a big issue, even if there's some political strife. The market really is looking at earnings for the most part, and does that strife affect earnings or not? So and most of the times it doesn't. And the market tends to do well in November, tends to do even better in a presidential election year after, the election's over in November, and all the way through to December, actually. So, we'll see what happens. But there may be, a lot of people a little nervous about it and kind of holding back some of their money. And I wouldn't be surprised by that at all. So again, I think what we're doing right now is we're kind of building another little range. We had a big range from the summer. We finally broke through that, got it to a new all-time high. We're very close to a new all-time high again. But what we've been doing here is kind of churning sideways, more or less, just kind of building up another base, which again, I think is very healthy. First of all, we're still above the previous base, so that's good. And we're producing now another base. So if we can break through that, maybe after the election or what have you, we'll have some nice support below the market that just, if nothing else, at least slows down a descent, but often actually reverses the descent as that buying comes in once the price gets back down to that support level. So anyway, not a bad day at all. Again, it's a good time to be in the market and kind of see what's going to happen here. There's an awful lot of catalysts driving this market forward that really haven't changed. So look forward to seeing what's going to happen tomorrow. We'll talk to you then.